Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. And back from our original location, back from vacation, got some surfing in and some other fun in the sun. Now back to reality right before the FOMC meeting we've got going on today. Keep in mind, it's only going to be a 25 basis point hike. A lot of folks are going to be waiting to see what Powell says after the meeting and talk about what they're seeing going on in the economy. Some people are leaning towards hoping that he starts talking about a 50 basis point move at some point. I don't think that's going to be the case here, folks, because we're seeing the economy start to slow down a little bit here. Well, let's take a look at core retail sales here in the United States. That's stripping out automobiles, transportation, things of that nature that are more volatile aspects of our purchasing timing. It's just not very consistent. It's very off the wall, really. It has to do a lot with incentives and things. So core retail sales, stripping out all those autos, came in at 0.2%, expected to be 0.9. So folks, it was a real miss there. But you put in automobiles, comes in at 0.3, expected to be 0.4. Nice revisions though to last month's numbers into positive territory, up by almost % on the core retail sales, stripping out that food and energy, and up almost another % on the regular retail sales. So yeah, we did miss on that front headline number. Nice revisions to the last month's number. Going to make up for it a little bit here, folks. But one of the things we're seeing is a precipitous drop in these retail sales. So that's just something we're going to keep an eye on. Hopefully that's not a theme that we're going to be seeing going on throughout the summer. We also have the National Association of Home Builders Index. I would expect that is going to wane a little bit as the price of the goods that are going into these buildings is starting to rise a little bit. And I'm sure that some of the home builders are starting to get a little bit nervous there. We also got crude oil inventories. Taking a look at crude oil here. We've seen this pullback here in crude oil for a few days now out of that $100 a barrel mark. I don't think that we can really sustain that for very long. It's going to start causing folks to pull back on consumption of crude oil, meaning they're not going to drive, they're not going to travel. So we don't really want to see that going into the summer times, because that's where we start to see a lot of the travel start to happen for folks as the kids go to summer breaks, right? Crude oil inventory is the most important thing we got going on today. We kind of briefed on that. Was the FOMC meeting today expected to raise interest rates by 0.25% or 25 basis points. So we will be at about 0.5%. Another thing we've noticed is Fed talking about they've stopped the asset purchases. That's allowed the markets to be free market price discovery here, folks. So we're starting to see some markets actually start to break out of those ranges that we've seen, especially something like here in the bonds. We're starting to see those price drop. Interest rates are on the rise there. Something that we talk about in our videos, folks, is this is a part of the portfolio, your bond portfolio, that nobody pays attention to. It's just that boring part of your portfolio. But one thing you have to keep in mind is that a major % of your portfolio value is based on the value of a bond. And as interest rates start to rise, that means the price of your bond starts going down. That is going to affect your portfolio value, as those prices are what's reflective in there. So covered calls, we talk about how to do that in these videos. So please take advantage of that. Before you go, smash that like button if you get a like vote for us. So, not really surprising to see bonds start to come off, especially ahead of the FOMC. I just don't think that the interest rates are going to rise as fast as some people are talking about. Why? Because of the slowing economy, I think, is going to be the overarching theme there, over inflation even. All right, Bitcoin. Gosh, Bitcoin just can't get ahead of itself. It's staying right here at the 39,000 area. We're slightly in 40 right now, but it can't get above this 50-day simple moving average, something we'd really like to see for long-term bullish trends. And, I talked about it. This would be a place where we would settle down because we're at that point of control. Well, that's exactly what's happened, folks. And it's not going to go anywhere unless it gets a kick in the pants, to be quite honest. Now, something to note with gold futures on this rally, we did test that 2,000 last week, and a little bit, we could say almost this week. But for the most part, one thing I wanted to notice when we talked about building trend channels, this was back when we were talking about swing trades and using options. And I talked about when we start getting these trend channels, we can put them in there and start trading off of the upper band and lower band. Well, something to note with this, a lot of times we see this happen. A market breaks out of the trend channel, but comes right back down to that trend channel and finds support. So we found that and talked about it when it happened before, but interesting that it's happening again here, right? That we are finding support. Don't always have the exact reasons as to why these things happen, but folks, that's why there are so many chartists out there and finding these things, because they do find themselves to come back into the trading regimen, where we could use this as support now, as we used it as a resistance in the past. VIX is coming off a little bit here, but that says we're walking into this FOMC. They've been pretty transparent as to what they're going to be doing here, and that's a 25 basis point move. So a lot of the data has been out for the month of March, so really not seeing a whole lot down the road here that is going to be market moving. So we've kind of priced in what we're feeling as the economy right now. So we talked about how the NASDAQ was going to be the one to sell off a little bit more. Well, it has, compared to something like the Dow Jones Industrial Average. We talked about this heading into this year, was that we were starting to see these sector rotations and we were going to see some bearishness, risk to the downside. But if you were to hold your hat up on something to retain some value, that was going to be the Dow Jones Industrial Average. And it has done just that. It has not had the massive sell-off that we've seen in some of the other tech names there. E-mini S&Ps did have its sell-off. It's a bit of a mixed bag here. But again, we talked about how markets coming off. It is still in this negative trend channel. As a matter of fact, I could probably draw one real quick and dirty here that looks pretty good. I'm just going to try and hit a few of the tops. We can say that it busts through every once in a while. And then probably just even maybe, let's just see if we can extend this. It's not going to be a very good one, but let's just try to do it. Extend to the right. Not a very perfect one, but one of the things I wanted to touch on was that one actually might be pretty good if we line that up a little bit better. So it's just not work. Let's try and do it real quick. So if I can get a better line there, let's do that. That's a better trend channel probably for this market. I can play around with that a little bit more and kind of tighten it up a little bit. But as you can see, we would need to really break out of these trends in order to start gaining any type of upward momentum, where we would be talking about bullish moves here. So risk tilt to the downside in equities across the board. And something about IBM, this is a perfect market. Like what we were talking about, these blue chip stocks, how they are retainers of value. And despite the fact that we've seen most of the tech sector really having these sell-offs, big names like Big Blue here are the ones that are where I would be putting my money right now with this volatility, and looking at trying to lower cost basis by selling some covered calls like we were talking about in the bottom. So check those videos out at Pro Trader Strategies. And before you go, smash the like button. If you have any questions, I will circle back around to make sure you're all clear concept. And don't forget to subscribe. If you can't take that, take it easy.